morning, and welcome to Investment Talk TV, brought to you by the award-winning advisors at Legacy Wealth Management. And now, with the latest information on the stock market, your investments, and retirement opportunities, here are Legacy Financial advisors Paul Meyers and Brady Brunsvold.
Well, good morning on Sunday, July 25th. This is Investment Talk, brought to you by those funny, crazy advisors from Legacy Wealth Management. I'm Paul Meyers, and instead of Brady Brunsvold, we've got Brian Bruce. Good morning, Brian.
Good morning, Paul. How are you?
You know, I'm doing well. I can't believe, has it been hot or what lately?
It's been hot and it's been dry.
One thing I will tell you, for those viewers who are out in eastern North Dakota, we have been tickled to be host to the Blue Angels. That's what we've got, isn't it? The Blue Angels?
That's the Blue Angels. And they're quite impressive, aren't they,
yeah,
Paul?
It's been amazing. In fact, right after today's show, I'm going out to see them live in person. And with any kind of luck, I won't go up in the air with them because I don't think I'd take that too
and
well.
I don't think that we want that,
No,
Paul.
We don't want to be taking, who knows what would get on the windshield. If I were up there, it would be a bad deal. In any case, pretty exciting. I think over half the state, you can probably hear their thunderous sound, and pretty exciting to have the Blue Angels in this half of the state. And I know we get some pretty exciting stuff out there in western North Dakota, too. I had a great conversation with one of our clients out in western North Dakota this week talking about the unbelievable recreation out on the Missouri River, the boats and all the fun out there and the big paddle wheel boat out there. In fact, I think, Brian, I haven't told anybody about this, but we're going to try to have a client event on that giant boat out there this summer. So that should be pretty good.
Wow, that sounds pretty exciting, Paul.
Well, I think it would, and no one hopefully will get pushed over the edge. This is our 43rd episode of Investment Talk TV, and we get a chance to come to you live every Sunday morning, more or less live every Sunday morning, right here on Channel 6 and 8 in Fargo and Grand Forks, and then the channels out of Bismarck and Minot and Williston, basically ABC television for North Dakota and a good part of Minnesota. So wherever you are, we're happy that you're joining with us this morning. And it's our intention to talk about what's been going on in the market, and it has been a pretty crazy week this week, Brian. Holy cow.
It's been a crazy week. A lot of ups and downs, Paul. We're going to talk about that later in the show.
How many points down, I wonder, did we go on Monday? Didn't we go down something like 700 to 900 points?
At its lowest point, we were down over 900 points.
That's tough. But amazingly enough, of course, it rebounded on Tuesday and Wednesday and even on Thursday. So that's a pretty good deal. Well, we're going to talk about that and all those other things. But this morning, we have some breaking news. It isn't really totally breaking because we told you about this last Sunday, but we like to call it breaking news because that's what all the big news media do. I love it. They've got a story that's 3 days old and they call it breaking news. Well, here's our breaking news. The award-winning Legacy Wealth Management advisors are going to be coming to you live for some in-person investment seminars coming up. And Brian, I'm going to turn to you to start detailing exactly where we're going to be and when we're going to be there.
Thanks, Paul. First of all, we're really excited about this. We've been talking about this for a long time. So the breaking news part, who knows? But at any rate, we're going to be in Bismarck, North Dakota on August 10th, followed by a trip to Detroit Lakes on August 12th. And then the following week on August 17th, we'll be up in Grand Forks. So those are really three really important dates, Paul, and we've been really excited about it, been talking about it for a long time.
And here's basically the story. We're going to be in those three locations, August 10th at the Bismarck Radisson, August 12th at the Detroit Lakes Holiday Inn, and August 17th at the Grand Forks Canada Inn. All events are going to start at 6 p.m. And now this is an investment seminar, and the seminar is free to attend, but seating is limited. And so what we suggest you do is that you send an email to team@legacywealthfargo.com. Send an email to us and get registered. Be sure you tell us your phone number, how many people are attending, and, of course, which event you're going to be at. A couple of things about this investment seminar. First of all, the topic at this investment seminar I think is pretty cool. It's called Navigating Your Retirement Investments, the Facts versus the Fiction. I love that slide. That, by the way, I think is Brady with the pipe and the hat. I'm not sure. Could be. In any case, Navigating Your Retirement Investments, Facts versus Fiction. It's going to be a chance for you to come in, see us in person. We're going to be talking about what's going on for people with regard to investing right now, especially with the market being so high, and some things to keep in mind as far as their retirement is concerned. And basically, we're going to be separating the facts from the fiction. A good chance for people to come in. And if you want to bring your portfolio statements with you and talk to us after the seminar, that's great. But it will be in person. Here's the catch. If you come to one of the seminars, we'd request that you be vaccinated in advance because we are following the CDC and other government regulations with regard to the COVID precautions and so on. So be sure that you send us an email at team@legacywealthfargo.com and include your attendee names and the phone number and which location you plan to attend. And by the way, we've got some more locations that we're going to be announcing soon, but we got these first three zooming along right away. And Brian, I don't know how you feel about it, but I am very anxious to get back to in-person meetings with clients, especially when we can do them safely.
Oh, I completely agree with you, Paul. We've been cooped up for far too long throughout this global pandemic, and we're really excited to get out and see some people. And we also have, as part of our seminar and the attendee, we also have some prizes that we're going to be giving away.
Oh, yeah, I forgot about that. Tell us about those, Brian.
So, people who sign up are going to be eligible to register for a gift card drawing, the Red Lobster gift cards that I'm holding up right here, at each of our seminars. Correct, Paul?
Well, that's absolutely correct, Brian. And the way I look at it is when people sign up and go to team@legacywealthfargo.com and send us an email saying they're coming, we're going to choose from among the first people who sign up, the first dozen or so at each location or whatever it takes. We're going to choose from them, and they're going to win a gift card even before the actual seminar. Now, of course, they have to come to the seminar in order to collect those gift cards. You can't just sign up and then not show. But I think it's pretty cool because we want to reward you for signing up as soon as you can and getting in on the program. And I think it's going to be good. And next week, we'll be announcing what kind of delicious food we're going to be serving at those events. And let me tell you, each of those places has promised us a very good menu of fun things that we're going to be able to serve. So that's coming up on Tuesday, August 10th, Thursday, August 12th, and then again on Tuesday, August 17th, the trifecta of 3 in-person seminars brought to you by the advisors at Legacy Wealth Management. Well, I tell you what, we better zoom along here pretty soon or we're going to get far behind. Today's agenda is going to have a lot of fun things on it. Of course, we already gave you the news about our upcoming seminars. We've got 5 points in 5 minutes. We have a stock market week in review, and we have a special video interview today coming up, assuming our technology works. We're going to be talking with Perry Miller from Wahpeton, North Dakota, who has some questions about the market and our advice and things like that. So first of all, Brian, let's jump right in and dive into our economic trends and the things shaping the market right now. We call this 5 points in 5 minutes.
Every week, the advisors at Legacy Wealth Management, with the assistance of economic researcher Mick Higley, comb the economic reports, and we come up with data and information that's helpful as we analyze the markets and put together our advice. We call this 5 points in 5 minutes.
Okay, I'll get it started off, Paul. So the current bull market for the S&P 500 index is in its 8th bull run in the last 50 years. This bull has gained 97.6% from the lows of last March 23rd of the coronavirus pandemic through last Friday, July 16th. And it's important to note that March 23rd was the low point, Paul, of the pandemic, and that's really what this stat is calling out.
So I think, like you say, it's neat to say, well, we're up 97.6%, but part of that is because we were starting at a pretty low point in the market.
That's correct.
Okay. Well, let's take a look at oil, shall we? One of my favorite topics. Despite an increase in the price of oil in 2021, the production of crude oil is relatively flat this year. Crude oil was $48.52 a barrel as of the end of last year, 12/31, and it's increased to $71.81 as of last Friday. The U.S. field production of crude oil was 11 million barrels a day as of January this year, to 11.4 million barrels a day as of a most recent Friday. And I think one of the important things to look at this is OPEC has just made a big agreement that will probably allow for the cutback in production in some areas of oil, and in some other areas they'll be increasing production. So we're expecting to see oil a little more volatile going into the future.
That's correct, Paul. And you've seen some of the pressure has been taken off of the oil production here domestically, and we've seen the prices react to that and the overall downward trend of the price of a barrel of oil.
Let's talk about single-family homes, Brian. What do you got for us there?
Let's go ahead and do that, Paul. So the average single-family home in the USA has appreciated 15.7% over 1 year ending last April, and 7.9% over the last 5 years, 6.4% over the last 10 years, and 4.1% over the last 20 years. And what's interesting to note on that last part of 4.1% over the last 20 years, the stock markets on average have averaged somewhere between 7 and 7.5%, Paul. So when you compare the two, real estate's been good. The market has even been done better over that period of time.
Good points, Brian. Good points. Let's talk about inflation using the Consumer Price Index, the CPI, as the measurement. Inflation was up 5.4% on a trailing 1 year basis as of the end of June this year. Now, in the past 30 years at Legacy Wealth Management, we've noticed there was only 1 month when trailing 1 year inflation was greater than 5.4%, and that was back in 2008. And we all know what was going on back in 2008. Some people say, wow, this inflation thing, it's something to worry about, higher prices. It's only normal that we're going to have higher prices coming out of the coronavirus situation because demand was so stifled during the coronavirus. Now, all of a sudden, demand is outstretching the ability to supply, and so prices are going up a little bit.
That's correct, Paul. Let me round us off here on point number 5 with Medicare covers 61.2 million Americans, while Medicaid covers 73.8 million Americans, low-income Americans. Interesting about this, between Medicare and Medicaid coverage has been very beneficial to those who qualify over the last couple of years. And one of the things that we're going to be keeping an eye on at Legacy Wealth Management is any potential upcoming legislation that may take place that alter those ages of eligibility and how that might affect people's retirements, their planning, and their overall strategy.
You know, there have been a lot of attempts by various politicians to get rid of some of the healthcare programs that are out there, which I believe would be much to the detriment of the population. But, you know, one thing people always talk about is they say, well, premiums have gone up so much because of some of the healthcare programs that the government has instituted. The fact is the government does not set those healthcare premiums. Your insurance companies set those healthcare premiums, and they've been riding the wave of the highest profits in their history. So there's someone to blame if you're concerned about higher healthcare premiums, and it's not really the government. It's those insurance companies that have been boosting it up. Well, okay, let's shift gears because we now have kind of a special live segment and a live caller and an opportunity to chat with him about the stock market and some of the questions on the top of his mind. I'm going to see if I can switch over right now because we're going to go down to Wahpeton, North Dakota, where we've got Perry Miller on the line. Perry, let's see if we can pull you up on the screen, okay? Well, there he is. Looking good, I might add. Yeah, Perry, sorry about that. I was a little away from the microphone. Perry, good to see you on this fine morning. Can you hear us okay?
I can. A little faint, but I can hear you, Paul.
I've been a little faint all my life, I think. Perry, I love that giant fan over your head. It adds a certain kind of je ne sais quoi to what's going on.
It kind of looks like I'm wearing one of those beanies with the propeller on, doesn't it?
It does. Perry Miller joins us today on Investment Talk TV, and it's great to have Perry on board. He's been a friend of those of us at Legacy Wealth Management for a long time. And Perry, you've been very active, I know, in politics down in that corner of North Dakota. Tell us about some of the boards that you are currently serving on and have served on in the past.
I'm currently a county commissioner down here in Richland County. I'm on a board that listens to, it's called the Southeast Inquiry Committee that meets quarterly, and it deals with complaints filed against attorneys. And they need some lay people on there, some non-attorney people. I'm on that board. I serve on a board at our church, Bethel Lutheran, and I'm also currently on the board for Headwaters Music Festival here in town. And I know there's a couple others I'm forgetting, but there's usually 4 or 5 to pick from.
Perry, I want to talk to you about that Headwaters Music Festival in a couple of minutes, but right now, you and I were chatting before we went on the air, and you know, you brought up some questions. We know that a fair number of people have questions about investing in the market, and we thought we would, well, maybe you can pose some of those questions to us and we can have a bit of a conversation about that.
Well, one of the things I asked about, Paul, was, you know, we're hearing more and more about alternative energy, and we're hearing about electric cars, and we're hearing about solar farms. And of course, there's some alternative energy stocks out there, but I'm just curious, how does a person know what to look at, given that it's fairly new technology? Some of these companies are very new. How do you separate the wheat from the chaff, so to speak, Paul?
Well, a great question, Perry, and I wish I had a perfect answer for it, but I will tell you what we often feel, and that is that when you're investing, you'll hear about these alternative energy sources quite often, and the ones I think to watch out for are the ones that are, basically penny stocks, and they come with someone advertising that this thing is going to double and triple and go up 10 times in the next year. And I think the thing people have to realize is that if somebody calls you or sends you an email suggesting that you buy a particular alternative energy stock, it's probably because they have a vested interest in having you buy some of those stocks. In fact, companies will often get paid to push an alternative energy stock. And that doesn't mean they're all bad. It just means you need to cast a bit of a skeptical eye when looking at some of those and maybe look at the ones that have been around for a little bit longer and look like they know what they're doing. Now, I know, for example, when we take a look at the auto company Tesla, which has had an unbelievable run in the last few years. Earlier this week, they were trading in the $650 range after, frankly, having been several $100s below that. In fact, earlier this year, they were trading as low as $273 a share. Tesla is big in the alternative energy form of automobile. Another interesting thing that I saw about Tesla is that they're advertising that their charging stations they're going to make available to the public for other automobiles, which I think is a big move on their part. Should be interesting to see how that turns out. So as far as my advice as to which one to look for, I would work with a financial advisor and hopefully they can help you do the research, but avoid the ones that are promising, doubling and tripling and going up 10 times in the next year, because that just doesn't happen very often, does it?
Sure.
Yeah.
One of the other questions, Paul, with interest rates as low as they are and the market performing as well as it is, say that someone was going to buy a piece of property and put a significant amount down on that, more than the bank would require for a loan. Is it a good idea, instead of putting that money down on a loan that, say, you could get for maybe 3.5% or 4%, are you better off leveraging that purchase and taking that excess cash you might have and putting it into the market? What are your thoughts?
Great question again, Perry, and exactly the kind of question we often get at the office, isn't it, Brian?
It is.
It's people want to know about everything from paying off their mortgage on their house to should they borrow money against their house to go invest it in the market. And I will tell you, it would be reasonably unethical for us to say, yeah, you should borrow money and put it in the market. But I will say this, at a time when banks are willing to make loans at historically low rates, it's pretty hard to walk away for most people from those low rates. And we would recommend, if it's right for you anyway and appropriate, to consider very strongly when a bank is offering you a pretty low rate and utilize the bank's money, because that's what they want you to do. And they're happy because they made a loan, and you're happy because you got a great rate. As far as what you do with that in terms of investing in the market, well, that depends on your own individual situation. But I will tell you, the historical rate for the market, Brian a little while ago was quoting 7 to 7.5%, and I think we've seen for the S&P 500 over the last 50 years an even higher rate of return than that. And certainly in the last couple of years, I mean, right now, the Dow Jones is up something like 11%, I think, for the first half of the year. So there's pretty good money to be made in many ways in the market. We can't guarantee that, and we can't tell you historically that it's bound to happen again. But I think, Perry, if I get the gist of your question, it's, should you dump as much cash into a thing as possible, or should you use some of the bank money? And we have a tendency to say, hey, the banks want to loan you the money. Let's take advantage of it.
Sure. Especially with a long-term fixed rate.
Boy, it's hard to beat that, isn't it, Perry? I imagine you've seen rates, in the 3 and 4 and 5% range, haven't you?
Well, if you're willing to take a 15-year fixed rate, you can be below 3% right now.
Wow. That's tremendous. That's tremendous.
Yeah. You got time for another one, Paul?
I do. Well, let's take it.
So let's say you've got someone that's older, does not need to be involved in a lot of market risk. They're maybe sitting with money in CDs that, of course, are paying a minimal return. Do you have an approach where you could say, let's be a little more aggressive than that? Let's get into the stock market, but just some safer stocks that don't have a lot of volatility. One that comes to mind for me is Otter Tail Power. It pays a dividend. The trading range through the good and the bad isn't real volatile and wild. What are your thoughts on that, Paul?
Well, also a good question, Perry. And again, Brian and Brady and I see these questions all the time because you'll get someone who's 65 years old and they'll say, I've got this money in a CD and it's guaranteed to give me, it's got good news and bad news. And the news is exactly the same. The good news is it's guaranteed to give me 1.5% to 2%. The bad news is it's guaranteed to give me 1.5% to 2%. And, our goal really, or our technique, is to take a look very closely at the kind of risk profile that an individual person has for the market. We don't want someone to take on more risk than they would like to have. And so we do try to monitor that pretty closely. And yeah, there are plenty of things that people can do that should keep the risk down somewhat. But, Perry, one of the things we've talked about, and Brian, I think you spent some time talking about it recently on the radio show, is that bonds, for example, are not necessarily more conservative, are they, Brian?
That's correct. Perry, thanks for coming on the program today. We really appreciate it. Yeah, just to add to your point, Paul, when you're looking at different types of investments, some of the prevailing wisdom and the overall thoughts are not necessarily what they're made out to be. And bonds fall into that category depending on the type of bond, the duration, the origin of the bond, etc. And we talked about that in the previous television episode as well, and we spent quite a bit of time talking about it. But that's a really good point that you bring up, Paul.
Yeah, and Perry, I think to kind of summarize the answer on that is that if people are looking to be a little more conservative, but at the same time wanting to be a little more aggressive perhaps than the CD in a bank, there are lots of things that they can use. You mentioned a particular individual stock, and that one can work for some people. We're going to look for things that combine a little bit of growth and a little bit of dividend paying, so that maybe by the time they're all done, they can seek a rate somewhere in a total return rate somewhere between 5% and 7%, something like that. Going to typically do better than their CD choices might be doing in the bank. But the thing that we do at Legacy Wealth Management is we want to take a very close look at their risk profile, what they would like to do, and give them something that we hope, anyway, will match up to their risk profile the best that we can. Hey, we're kind of zooming along in time. Let's talk about that music festival down in Wahpeton. That sounds like a fun deal.
It's the second annual, Paul. It was started by a gentleman named Dave Engstrom. And if anybody was familiar with the VA hospital in Fargo, they might know Dr. Engstrom. He's a native of Wahpeton, retired back here, but for many years was in charge of the VA in Fargo. And wonderful guy. We lost him about less than a year ago. Oh. But his vision was to start a music festival that incorporated an educational element, a bit like if you saw the movie School of Rock with Jack Black.
Yes.
Not quite that raucous, but the premise is that people who maybe have just a little bit of music ability but want to become a better guitar player or a better singer, there's an educational element that musicians have volunteered their time, and then in conjunction with that, we have 2 days worth of bands in Wahpeton and Breckenridge that will be performing live outdoor, and it culminates on Friday night, next Friday, the 30th, with a live band right in downtown Wahpeton on 4th Street, where they block off the street, and it's going to be a really, really fun event. It's very unique, and it's outdoor music in the summer, and a lot of good people. So it's what could possibly go wrong? It's going to be a great time.
At Legacy Wealth and here on Investment Talk TV and our radio show both, we like to highlight some of the local things that are going on. And we know there's a lot going on up in Minot and Bismarck and even way out in Williston and up north in Grand Forks and down here in Fargo. And this one spotlights a program going on down in Wahpeton, and we're glad we're able to give a little bit of a time to that. Once again, now that starts when? Is it next Friday, or what day is it?
It starts next Thursday, Paul, the 29th. At noon, the music kicks off. And the best way to look it out, most people have access to Facebook. Go to the Headwaters Music Festival. Make sure you get the one in Wahpeton Breckenridge. There are several different ones. I think I sent you a screenshot of the homepage, so you know you've got the right one. and check it out. And the whole schedule's on there. It's free to the public. It's a completely free event. And we're pretty proud of that we made it affordable. And while you're down, you can check out the Chihinka Zoo we have 2 rhinoceros here in Wahpeton, Paul, at the zoo.
And neither of them have been elected to public office, I might add.
Well, no, and I think only one of them has an investment account with you. I think you're probably working on the other one.
We are. We're trying to get him in. He's a little bit thick-skinned, but we're going to get him in. I know we will.
There you go.
All right. Perry, it's been a treat having you on board. I hope you'll take this offer to come back and visit us again, perhaps in person in the studio. But in the meantime, always fun to have you on board, Perry.
Appreciate it, Paul, and thanks, Brian.
All right. Well, that's great. It's good to have Perry with us. And I think the next thing we're going to do is we're going to take a look at the stock market week in review. I think we even have a chart to go with it.
There it is.
Yeah, well, there's our opening slide, the stock market week in review. Let's take a look at the opening slide for the Dow Jones Industrial Average.
Yeah, there it is, Paul.
You'll notice pretty exciting on Monday, wasn't it, Brian? It looks like somebody fell off the cliff there as far as our Dow Jones Industrial Average chart goes.
Yeah, absolutely. This is a classic example of investors reacting to news out there, Paul. And what we saw on Monday was a steep sell-off, and a lot of the talk and discussion amongst the investment community was around the COVID and specifically the Delta variant.
Yeah.
And once people heard that, investors heard that, and then there was a sell-off in the airlines because people aren't going to be flying anymore with talk of mask mandates and lockdowns. And then you had a pile-on effect with hotels selling off and then cruise lines and so on and so forth. And so that's what led to the decline initially of 400 points and then 600 points and then 800 points. And that's exactly what you saw there.
Yeah, it was an amazing day on Monday. And I know, Brian, you and I and Brady all fielded some phone calls from people who were saying, oh, man, is this the beginning of the big downturn in the market? With the market up so high, is it likely to pull back? And I will tell you that historically, which doesn't always prove anything, when a market hits a new high, there are oftentimes when it will then put in a low. And we've gone a long time without a big pullback, and that was a pretty big pullback on Monday. It took us all the way until Tuesday and Wednesday before we recovered from that. And by Thursday, we had definitely recovered all of the points that had been lost, and we made up quite a few points from there. Let's take a look at the NASDAQ chart, because I think that's pretty interesting, too. It shows the same kind of situation. Monday was a tough day this week for the markets, but look at that. By Tuesday, Wednesday, Thursday, man, we had not only recovered, we were much higher, weren't we?
We were much higher. Looking at the NASDAQ chart, we have pretty much the same story. What one of the things that came back was strong earnings, Paul.
Yep. Brian, I don't mean to cut you off, but I can hear that guitar player in the background. That's usually Brady telling us we've reached the end of our show. Thank you so much for listening to Investment Talk TV. We'll be back next Sunday.